We use our books in discussion. I hope that you'll have a book with you, or you'll make a buddy right this minute. The person sitting next to you. You can share books. You could bring it on Wednesday. They could bring it on Friday. It's nice when you have a book to follow along and learn. May I have your attention? I'm surprised about a few of the changes that I'm discovering between the 10th edition of the book and the 8th edition of the book. I can't speak for the 9th edition of the book, but I didn't see it, okay? So it's a leap. For a long, long time, as long as I've been teaching the basic accounting equation that I mentioned to you in Monday's lecture and that you perhaps read about in the chapter. What the authors showed you in chapter 1 about the expanded accounting equation, in my estimate, belongs better in chapter 2 than it did in chapter 1. They jumped the gun a little bit. Now, at the risk of confusing you, which I do not want to do, I'm taking a risk the rest of today of enlightening you to get you to understand concepts better. I did it twice yesterday, and I think we succeeded. I think the class left understanding better. I want to concentrate today on the basic accounting equation. My first question of you is, if I called on you right this minute, could you say it without looking at any crutches? Do you know the accounting equation, the basic accounting equation? Yes. If you think you could say it, raise your hand right this minute. Come on. Good. A good number of you thought you could. I want a few of you to say it for me. If you're willing to say the accounting equation, hold your hand up. What's your name?
Alexis.
And this is the last day that I'm going to have to point and say, hey, you, and be impolite and all those other things. I'm going to try to learn a few names today, but I'm going to try to learn more after we get the seating chart prepared based on what you just signed up for, okay? Alexis, say the accounting equation for me.
Assets equals liabilities plus owner's equity.
Thank you. I want somebody to say the accounting equation for me. What's your name?
Victoria.
Hi, Victoria. Say it.
Assets equals liabilities plus owner's equity.
Good. Will you say the accounting equation for me? Hold your hand up. What's your name?
Me.
Yes, sir.
Hans.
Hans?
Yes.
Say the accounting equation for me.
Assets equals liabilities plus owner's equity.
One more person. Who's willing to say the accounting equation for me? What's your name?
Scott.
Scott.
Assets equals liabilities plus owner's.
Let's all say it. The accounting equation is assets equals liabilities plus owner's equity. Y'all remember the jokes I made Monday's lecture about how I want you to tell me that at homecoming 10 years from now?
Yeah.
Confess to me that you can't say the expanded accounting equation at homecoming 10 years from now. I don't think you can say it today, can you? But you can say the basic accounting equation. That's not too much to ask. If we understand the concepts here, you're going to know that other one too. When you do your next homework problem, you're going to understand it better because of what happens in the next few minutes. Hang with me here. Let's break it down. Let's know it better than wrote. Could you define for me assets without looking back in your book or notes? I need a volunteer. What's your name?
Demetrius.
Demetrius?
Yes.
Say what assets are.
Equipment, cash.
Those are good examples. I was thinking of a generic definition.
A home.
That's still an example. It's okay.
Anything that you own.
Thank you. That's better. Thank you.
You're welcome.
Was your hand up?
Yeah, it was.
What's your name?
Jehoshaphat.
Jehoshaphat.
Yeah.
Tell me, if I had asked you first the definition of assets, what would you have said?
Anything that value.
Anything that has value. How would you have defined assets had I called on you? Come on, I need one more volunteer. What's your name?
Cassidy.
Cassie?
Cassidy.
Cassidy.
Yes. Resources owned by a business.
Good. Real good. Are y'all with me? Does it have to be verbatim what I said in Monday's lecture? Yes or no?
No.
No. As long as you don't pollute it, as long as you don't change some word that changed the meaning and don't accomplish what we intend to. Yesterday, I had 6 people in a row say things of value that are owned. Things of value that are owned. Things of, and once we were in that rut, nobody would break out of it. I heard some acceptable definitions today. It doesn't have to be verbatim. I addressed one of those in Monday's lecture. I don't like to narrowly define it as just business. I would like to define it broadly enough that it applies to other groups you heard named in Monday's lecture. Businesses, nonprofit organizations, governmental units, individuals all have assets. I skipped a couple of examples I wanted to do in Monday's lecture because in both we were pressed for time. Let's do one of those today. In Monday's lecture, we named 10 assets to represent, he's named almost 10 already, right?
Right.
Let's narrow that a bit. Let's name 10 assets in your living accommodations, your dorm room, your apartment, your house, wherever you are. Come on, I need 10 volunteers real quickly. Name me 10 assets. iPod. Laptop. Furniture. Television.
I was gonna say bed.
Bed. And then you decided not to say that?
Well, because he said furniture.
But that's okay. He didn't say bed.
Cell phone.
Didn't hear you.
Cell phone.
Cell phone. Clothes. Come on, let's go.
Gotta go really blank.
A lamp.
Car.
Car. You've got a car in your apartment.
Oh.
In your living accommodations. Come on, help me out. Finish this off.
Keyboard.
Keyboard.
Artwork.
Artwork.
Hair dryer.
Hairdryer. Did we name all the assets in the whole wide world? No. Do you have a good idea what assets are? Yes or no?
Yes.
Good. The accounting equation is assets are equal to liabilities plus owner's equity. I need you to define liabilities for me. There are several right answers you could give right this minute. Would you give me one? What's your name?
Wesley.
Wesley?
Accounts payable to others.
Accounts payable to others is a correct answer. Where's your hand up?
Yeah.
You told me your name a minute ago and I forgot. Scott.
Something that you owe.
Something that you owe. Let's do this contrast right this minute. Could we summarize assets and say things owned and say liabilities are things owed? One letter separates assets from liabilities. The letter, speak up. And. Y'all with me or not? There's more than one way to say what liabilities are. Tell me what liabilities are. I'm looking for other answers. Do I know your name?
Wesley?
Apparently I don't know your name. Two Wesleys? Have I asked you today your name?
No, sir.
Okay, good, because I was searching and it wasn't there. Wesley, how would you define liabilities?
Any debts you have?
Any debts you have. If this were Name That Tune, I could name that tune in one note. I don't think we've heard that one yet. How do you define liabilities? One word? I've stumped them. The one that we said over and over in Monday's lecture and it was hard to say and it's got a silent letter in it?
Debt.
Ah, there it came in. Debts. Everybody say it.
Debt.
Debts. Things we owe. Nobody's named my favorite one yet. All of these are acceptable. My favorite one. Maybe I can lead you there.
Credit.
No. Good try. Let me try this one. Before we knew the accounting equation was assets equal liabilities plus owner's equity, the one before that was assets are equal to equities. How about defining equities for me, Alexis?
Capital? Something to do with that?
And that's a different kind of equity, okay? These are both equities. We're talking about liabilities and owner's equity. They're both equities, but we're concentrating on liabilities at the moment. Help me describe this by defining equities, please. You're approaching the ultimate guilt trip. The two classes yesterday got it right. Ooh, pressure. Nobody's going to try? It's always better when you say it than when I say it. I've already said it. Try. Equities. What are equities?
I'm thinking of equity would be like in your home.
That's the same thing.
Same thing.
That is the same thing. Now put it in words. What are equities?
Right?
Equities are not assets. Let's address that. We established a minute ago that assets are assets. And now we're trying to say that equities are equal to assets. But if they were the same thing, we just have one thing. Assets are equal to equities. And I'm trying to get you to define equities, and I'm going to fish one more time. And if I don't get an answer this time, I'm going to give it to you. What are equities? Equities are rights or claims to assets. If you don't know that, none of the rest makes sense. Put all the numbers and all the little blanks you want to and get all the numbers to balance and turn it in, get credit for the problem, and you missed a big concept here. Assets are equal to equities. Assets are things of value that are owned. That are owned, being the key there. And equities describes who owns them. There are two broad groups: creditors and owners. Thus, the accounting equation, assets equal liabilities plus owner's equity. And our focus for the moment is liabilities. We've said debts, we've said accounts payable to others, we've said all sorts of good right answers. I'm still fishing for this one. Can I give you one more try? Can you define liabilities for me in a way no one has said today in class? Wesley?
Something does not belong to you.
I was trying to lead you to creditors' claims on assets. If equities are rights or claims to assets, this group to whom we owe money is called creditors. And if you just put that adjective in front of the definition for equity, you've got creditors' claims on assets. Now, I understand that, but I want you to understand that. Do you understand it any better than when you walked in the room today? Yes or no? My favorite definition, not debts, not all those others we named, is this one, because it's the most explanatory. It explains it the best. Hear it one more time. Creditors' claims on assets. Which leads me to the third part of the accounting equation, owner's equity. Would you be willing to define owner's equity for me right now? Wesley?
Owner's claims on assets.
Thank you. You made my day. I led you to the water, and you took a big drink. Let's go back just a teeny bit. Who could say the definition for liabilities for me? My favorite definition. Wesley?
Creditors' claims to assets.
Thank you. Define owner's equity for me. Wesley?
Owner's claims on assets.
Who's with me right this minute? Hands above your head. Do you understand what just happened? We can name different things for owner's equity. We can say capital. But what a good explanation. It even talks to you, if you'll listen, owner's equity. If you know what equity is, owners claim on assets. But the parallel I drew is the one that's so powerful if you caught on. Creditors' claims on assets, owners claim on assets. Are you with me? Say yes or no.
Yes.
In exercise 1.6, we're asked to take the basic accounting equation, analyze these transactions, and see how it changed. Every business transaction should have two effects on the accounting equation. And we saw in Monday's lecture that those two effects could be recorded with the same thing on opposite sides, the same thing on opposite sides, or a plus and a minus on the same side, and it would keep it in balance. Let's read some of the things that happened in exercise 1.6, and let's use the basic accounting equation format. And if owner's equity changes, let's write a comment about why it changed. You didn't have to do it this way in your homework. You did the expanded accounting equation. I'm doing the basic accounting equation to try to get you to understand it better. Exercise 1.6 says, selected transactions for L, lawn care are listed below. Let's analyze these and see how they change the accounting equation. As you volunteer to answer for me, would you say these generic names first and allow me to ask you the follow-up question that would be similar to your homework? You had lots of assets, cash, supplies, accounts receivable, equipment, and so forth. You could have had lots of liabilities. You had accounts payable this time, but maybe notes payable or interest payable or something else. You had one owner's equity column called capital, and then others that I'm trying to ignore and not mention at the moment. At the end of the day, I want to address them and see if you understand it better. The first transaction said, made a cash investment to start the business. May I have a volunteer to describe for me what happened to the accounting equation when we made a cash investment to start the business? I forgot your name.
Demetrius.
Demetrius. What happened to the accounting equation?
He put money in his asset and money in owner's equity.
Increase assets, increase owner's equity. Class, does this work mathematically speaking?
Yes.
Demetrius, what asset increased? You said
Cash.
cash.
Yes.
And why did owner's equity increase? If owner's equity changes, we need to write a comment. What comment should we write there? Read what the book said. There'll be a hint there.
Okay. His investment.
It's an investment. It's an investment. So, what I've noticed is there are only 4 reasons that capital ever changes. And I'd like for us to take into account and learn them. So, the changes in capital that we anticipate or discover. I used to write and talk at the same time. I can't anymore. We're going to come up with 4 reasons that capital changes. We just discovered the first. And I'm going to write it singular and plural. This semester we are only a proprietorship. We're going to talk about businesses owned by one person. First of next semester, we're going to talk about partnerships, businesses owned by more than one person, and corporations, businesses owned by one person, by more than one person, sometimes lots of people. So we're going to talk about different forms of ownership, but these 4 items are not going to change. There are only 4 reasons that capital would ever change. One of them being investments by the owner. Demetrius says correctly, increase assets, increase owner's equity, increase the asset cash, increase owner's equity, capital, because the owner invested in the business. If you've got a question, you ought to ask me right now. The second one says paid monthly rent. May I have a volunteer to tell me how the accounting equation changed? I'm guessing Victoria.
Yes.
Good.
You're gonna deduct from assets and then deduct from owner's equity.
Decrease assets, decrease owner's equity. If owner's equity changes, we need to write a comment. What comment do you think?
Rent expense.
Rent expense is exactly what I write. Do you suppose, Victoria, that that is something that belongs on this list? Is that a change in capital?
Yes.
Yes? So what generic name should we give it? I don't think rent's a part of that, but
Expense.
it's an expense. Expenses change capital. In which position do you think expenses belong, Victoria? Which one of these?
3, maybe, or 4.
It's okay. It was just trying to have a little fun. You know, we could do the dry version, couldn't we?
Yeah.
It doesn't matter which one it is. It's still one of the changes in capital. I just like it there. Expenses. Now, we talked in Monday's lecture in the 850 class about the definition of expenses. I didn't get to it at 150. So maybe you want to do a little catching up right this minute. I defined expenses on Monday as sacrifices that we make in order to earn revenue. Sacrifices that we make helping us in the business to do what we're in business to do. Let's talk about the third one. Purchased equipment on account would change the accounting equation how? I need a volunteer. Hans, your face looks like call on me.
Wouldn't you,
Hold it. That's a question. I've asked a question. I'd like an answer. We're going to practice this all year long, okay? Could we fast forward the tape 5 years? Could you imagine being in the cubicle at work and your boss is paying you big bucks? And your boss walks by your cubicle and says, what do you think about that? Should we go with plan A or plan B? And you say, would it be plan B, sir? Anybody with me here? Your boss asks you a question. Your boss wants an answer. So we'll pretend I'm your boss. What I want exuding from you is confidence. Even if you're not, bluff it. Make me think you're confident. Even if you say, B? You know what I mean? That puts doubt in my mind. Say B. Yeah. Hans.
you would add to assets and subtract from assets?
Increase assets, decrease assets. I forgot what we're doing, Hans. It says purchased equipment on account. Is that the one we're doing? What asset did we get? Which one went up?
You got the furniture.
We've got equipment. We didn't have that before. Did we pay for it?
Yes.
So that would be why cash went down. Is that what you're saying?
Yeah.
Explain to me, Hans, this expression on account. You know, we talked Monday's lecture about this being the language of business. Sometimes we talk funny in business. This wasn't part of your vocabulary, I don't think, when you came to school here. Let's role play that one. So you went to the mall before you came to school. You bought a whole bunch of new school clothes. And you threw them on your bed and you yelled out, you stepped outside your bedroom and you yelled at your mom, "Mom, could you come here a minute?" And your mom steps to your bedroom door and looks at all those clothes piled on the bed and kind of grabs hold of the door facing in case she's got a faint. And she says, "Child, how on earth did you get all those clothes?" And you say, "Oh, no problem, Mom,
Credit. Charge it.
I think I got a class full of mutes. I don't think anybody has a tongue in here. How do you talk?
You bought it?
Oh, no problem, Mom. I
Bought it.
charged it. And I didn't even get an expression off your face like, "Oh, yeah, that's what I would have said." I think I'm speaking another language and you're not in my same universe. We'll have to go to chapel and have our president remind us we're all in the same universe. "Oh, no problem, Mom, I charged it." Well, so happens that in accounting, we've already assigned a meaning to the term charged. And it means something other than this phenomena that's happening in this problem. So we had to come up with another way to say it. And we came up with on account. Now don't tell me you went to the mall, bought all those clothes, screamed to your mom, "Come here, I want to show you something," and your mom steps to your bedroom door and you say, "Oh, no problem, Mom, I bought it on account." Is that the way y'all talked before today? I don't think so. "Oh, no problem, Mom. I charged it." Hans, did we pay for this equipment?
Yes.
It says we bought it on account.
Oh.
Did we pay for this equipment?
No.
We didn't. Is it increase assets, increase equipment, decrease cash, Hans?
No.
No. Is it okay to make a mistake in here, Hans?
Yeah. Yes.
Absolutely. This is a great place to make a mistake so that you and others can learn from it. Feel comfortable in that. Hans, can you help me here? What happened? I'll go for increase the asset equipment.
Okay.
What else happened?
You increase liability
Indeed. You know the name of it?
under the comment.
No. We're getting to that.
Oh.
You know the name of the liability increase?
And liability increase would be on account, right?
That's the process, the phenomena, but there's a specific name we give it. Anybody want to be a lifeline? Oh, thank y'all. Demetrius,
accounts payable.
We're gonna call this accounts payable. What we owe other people, we call accounts payable. So class, does this work mathematically speaking, yes or no?
Yes.
Does this?
Yes.
I got about 5 of you responded.
Yes.
Does this?
Yes.
Does this?
No.
I need 100%, and I need to hear you down the hall.
No.
I don't.
No.
Fatigues, army hat, combat boots. Come on, let's get with it. Does this work?
No.
This?
Yes.
This?
Yes.
This?
No.
This?
No.
This?
Yes.
This?
No.
This?
Yes.
Increase assets, increase liability works. What comment are you going to write, Hans?
Furniture expense?
What comment are you going to write? Help me out. What kind? Scott? Didn't I already write accounts payable when I put it in this column? Wouldn't that be redundant?
Yes.
I may not have made that clear. We're going to write comments when capital changes. Hans, did capital change?
Yes.
Increase assets, increase liabilities, and capital change too? You didn't tell me capital changed a minute ago, but now you're saying capital changed. I'm a little confused.
I am too.
That's the first step to understanding. With me, Hans? Did capital change?
No.
Are we going to write a comment? No. We write comments because capital becomes clutter. Lots of things change capital. If we use the basic accounting equation, capital becomes cluttered. We need to explain it as we go along. It helps. Are we going to write a category over here, Hans? Is it going to go on this list someplace? Buying equipment? Buying equipment on account? No, because it didn't change capital. Are y'all with Hans and me?
Yes.
Yes?
Yes.
Let's do another one. 4. Build customers for service. Is this a question about the last one?
Yes, it is.
I'll take it.
Is it because we did not make a payment? Because we didn't buy it cash or we didn't actually purchase it?
No,
Is that why this one?
no. It's because it didn't change capital. We got the equipment and we promised we'd pay for it. We increased assets and liabilities and nothing changed it. Nothing changed capital. And that's one of the things we're trying to discover. What does change capital and what doesn't? Capital doesn't change every time. There are certain things, 4 broad categories, that will cause capital to change. Are we okay?
Yeah.
Anybody else?
And it won't change until they pay us, or
Well, even when we pay us. Could we imagine that? This is 2 people that are curious. Is it okay if I satisfy their curiosity and maybe yours that didn't have the nerve to ask? When we pay this and make a payment on it, we're going to decrease assets, cash, and decrease that liability. What happened to capital? Nothing. Okay, Alexis?
Yeah.
Okay, everybody? It's good to be curious. 4. Build customers for services performed. Build customers for services performed. Every one of you should be answering to yourself every time. Maybe even writing an answer down in your paper every time. Before you hear somebody else say it, before you see it on the screen, you'll learn more if you'll answer every question asked. May I have a volunteer? Build customers for services performed. Wesley?
Plus assets and plus owner's equity.
Increase assets, increase owner's equity, Wesley says. Which asset?
Cash.
Which, why owner's equity?
Would it be, oh wait, I'll give an answer. Would it be accounts receivable?
That's the asset.
Okay.
Now, a minute ago you said cash, now you say accounts receivable, now I'm confused.
Okay, so then accounts receivable, assets, capital, owner's equity.
Yeah, I'll buy that. It is. Increase accounts receivable, increase owner's equity. Did we get the cash, Wesley?
Not yet.
What does this say that indicates we didn't get the cash?
They were billed.
We billed it. We don't have the money. So we're going to increase accounts receivable. I agree with that. Now, Wesley, we need to know what comment to write. If capital is going to change, we need to put something here. What explanation does this deserve? Wesley wants to use a lifeline. I need some help. What's your name?
Justin.
Justin. What happened to capital?
The revenue went
It's
up.
called revenue. We ought to know that. We need to know that. We need to know the definition of revenue. Revenue. What does revenue do to capital, class?
It increases.
It increases it. Justin, where do you suppose revenue goes on this list?
Wherever you want to put it.
I want you to guess. Two. So let's define revenue. A little while ago, I blurted out the definition of expense because I was tired of fishing. I want to hear you say the definition of revenue.
Owner's equity.
Here we go. Go.
Owner's equity.
An increase in owner's equity?
Increases.
Well,
owner's equity.
so did this. Is this revenue?
No.
Ah. Do I know your name?
Yeah,
Deanna?
assets gained from the work we do.
Thank you. Yesterday I was fishing for this one, and somebody said, cash coming in because of work performed. Did we get cash this time, Wesley?
No, we didn't.
It must not be revenue. Good logic or faulty logic?
Good.
Faulty logic. Is it revenue? What makes it revenue? What's the crux of the issue that makes something revenue? Deanna? That we do work. It's doing the work that makes it revenue. Must we get it in cash?
No.
No. The definition of revenue is assets coming into the business because of work performed. And this met that definition. We did work, and we got an asset called accounts receivable. We didn't get the money. Are y'all with me right this minute? This concept that we're discussing, when to recognize revenue, is a very important one. Revenue recognition is introduced in chapter 1, is all through the book, but we're establishing some concepts right now, this conversation, about doing the work, recognizing it as revenue when the work is done, regardless of when the cash is received. This is a very important concept. 5, withdrew cash for personal use. May I have a fast volunteer to do this for me? What's your name?
Chelsea.
Chelsea? What happened to the accounting equation when the owner withdrew cash?
And assets went down and owner's equity withdrawing.
Decrease assets, decrease owner's equity. I've heard you say correctly. Which asset decreased? Cash. Owner's equity decreased for what reason? What explanation shall we write?
Personal use.
Personal use will do.
Drawing.
Drawing, I like. Better than that. What is the word in this? What's the descriptive word here? What did the book say? First word? Withdrew. Withdrew. Withdrawal. Drawing. All those are acceptable ways to say it. If capital changed for this reason, Chelsea, do you suppose it belongs on this list?
Yes.
Which one do you suppose it belongs in? Like which of these slots?
Two.
2. Withdrawals by the owner is the 4th of these reasons that capital changes. 2 of these reasons are increases. Investments by the owner and revenue cause owner's equity to go up. Withdrawals by the owner and expenses cause owner's equity to go down. There are only 4 reasons that capital changes. Do you understand these better than when you walked in the room today? Say yes or no.
Yes.
My contention is that you should, and that you do. And my contention is that you probably wouldn't if all we had done is the expanded accounting equation all week. May I take a moment of your time right this minute and translate the basic accounting equation, which I prefer in chapter 1, to the expanded accounting equation, which you had the opportunity to do in today's homework, P11A, and have the opportunity to repeat in 2 homework problems for Friday. Could we make that conversion right this minute? That translation. Come on, be with me. The basic accounting equation, assets equal liabilities plus owner's equity, was expanded in today's homework to say 3 more columns out beside it. So let's hide this one to give us some space to gesture. You had no comment column in your homework. True?
True.
The next column in your homework, anybody remember?
Owner's capital.
This one was owner's capital. The next column was
Owner's drawing.
drawing. Do you see what I see?
Yeah.
The next column was
Revenue.
do you see what I see? The next column was oh, that seems to explain. Are you with me or not?
Yes.
The expanded accounting equation has all those things in their own separate column, but I don't think if we had done it that way all week long that you would have been able to converse with me or approach a test question. What are the 4 reasons that capital changes? Or some derivative of that. I think from our experience today that you should be able to name the 4 reasons that capital changes. Investments, withdrawals, revenue, and expense. Are you better off? Say yes or no.
Yes.
On the topic of revenue recognition, there is one other really important one here. Would you look at 6 with me? 6 says, received cash from customers billed in 4. Received cash from customers billed in 4. May I have a volunteer to describe how that changed the accounting equation? Victoria, have you done any of these?
Yeah.
I'm going to see if I can get me a new volunteer. Please. Justin? Are you Justin? Go.
The assets would go up and the accounts payable would. Assets would go up and liabilities would, or owner's equity would go up?
Assets would go up and owner's equity would go up is a good place to start. Which asset went up, Justin?
Cash.
We got the money. It says so.
Our accounts receivable.
Nope.
would go
Whoa,
up.
whoa, 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 whoa. We're going to talk about this one. Did cash go up?
Yeah.
It did. Why did owner's equity go up? Is this revenue? That's the problem. That's the question. Don't tune me out. Is this revenue? You got money from a customer.
No.
Doesn't this look like revenue?
Did we already?
Justin, you are not the only one in this room thinking that. And if they're not thinking that, they ought to be thinking that. This sure looks like revenue, doesn't it?
Yes.
You got money from a customer? Aren't there people in other sections that define revenue as money coming in because of work performed? What's missing here, Deanna?
The work performed.
We didn't perform any work here. Is this revenue, Justin?
No, because we already took it as revenue earlier.
Precisely. And the book even says that in number 4. Now, yesterday one group caught on to this, the second group didn't. This is a little accounting humor. Sarcasm. I hate to explain my jokes before I say them, but I want you to laugh out of this. Don't patronize me. Don't you give me a laugh, I don't deserve it. But if we reported this as revenue someplace else, and we call it revenue now, this is going to be a really good year. We're going to pay a lot of taxes this year. Y'all with me or not? This is double reporting. That's not right. Give me the right answer.
Assets go up and assets go down.
Which asset went up?
Cash.
Which asset went down?
Accounts receivable.
What this says is the customer in the previous one. Number 4. The customer that you wrote down in number 4 and said they owed you, paid you some of what we've already reported before. We've already declared this as revenue. This is another installment on this huge idea of revenue recognition in chapter 1. When is it revenue? When is it revenue, Deanna?
When work is,
When we do the work. That's the key point. And no work was done here. You got the money that you'd already written down. Increase assets, decrease assets. Increase cash, decrease accounts receivable. What comment are you going to write? Because?
Our capital insurance.
Thank you. Thank you. The seventh transaction described in the exercise says, incurred advertising expense on account. I suggest you press pause. Think about your response to this transaction. Commit yourself to an answer. And when you've come up with an answer, resume this presentation and see if you got it right. I think it'd be good for you. Go ahead. Press pause now. The transaction says, incurred advertising expense on account. That transaction would increase the liability accounts payable because you didn't pay this, you incurred it, and decrease owner's equity because of advertising expense. Decrease owner's equity, increase liabilities would be the correct answer. Number 8 says, purchased additional equipment for cash. Again, why not click pause, think about it a while, decide on your answer, and then resume. Go ahead. Click pause now. Purchasing additional equipment for cash would increase one asset and decrease another. Increasing the asset equipment and decreasing the asset cash rearranges assets but does not change the composition of liabilities or owner's equity. No change in liabilities, no change in owner's equity, and therefore no comment necessary. The next transaction and the final transaction is received cash from customers when service was performed. You know the routine. Click pause, think about it, come up with an answer, and resume. Receiving cash from customers when service was performed will increase cash and increase owner's equity because of revenue. Several times in this presentation we've talked about the definition of revenue. Assets coming into the business because of work performed. You did work and received the reward for that work, increasing owner's equity. In this case, the asset that came in was cash. Increase assets, increase owner's equity. Who's better off because you came to class today? Hands up. Would you remember where you're sitting? That's your discussion you want to sit number. You're supposed to know. I would have all the homework, and could I have those sign-up sheets again, please? Open both doors. Have a nice day. Have a great week.